think you all know us, but I guess a quick introduction is worthwhile just in case that is not true. So I'm David Bishop, and like David Lee, who's already spoken a little bit, I am a faculty member here at the University of Hong Kong's Business School. And we started the FinTech Ethics and Risk course a few years ago, in large part in order to get ahead of many of the rapid advancements in technology, and specifically in the space of financial technology, in order to, I guess, pose questions about, while we are improving things, while we're moving technology and the industry forward, maybe asking questions about, well, what happens as a result of this? What should we be considering? Are there potential ethical or legal implications, regulatory implications, societal implications? And so this session today is largely just a chance for us to kind of, get a chance to follow up with people, discuss or answer questions that people might have, and specifically to share some of the data that we've actually collected as a result of the course. And so just very, very quickly, we're not going to use too many slides, but we do want to just share a couple of things, because we've had about 16,000 people that have taken the course. And as a result of that, there's been some interesting, there's been some interesting information that has come as a result of that. I apologize, let me reshare. So for those that haven't taken the course, or for those that did and just want a super quick refresher, these are the 5 main principles that we built our course on. And if you are, I know several of you are students of David Lee's or potentially mine here at the University of Hong Kong, then you are potentially looking at or have discussed these specific 5 factors or principles in your other courses with us. So basically everything is built on the idea of trust. And this is obviously one of the major areas in the fintech space, but really just in the financial services space, where it is vitally, vitally important, and sometimes a little bit lacking. Proximity is this idea of things being near, but not just in terms of physical or geographical proximity, but also in terms of like relationship and emotional connection. Accountability, again, a prime important feature of our regulatory and legal system, which David Lee and I, as lawyers, this is a big part of what we would focus on if we were looking things from an enforcement or legal standpoint. But more specifically, in terms of if you're an entrepreneur, if you're maybe even a shareholder, if you're a business owner, if you're in the financial service space, what accountability should you have for actions that take or inventions that you create that maybe lead to mistreatment or harm? Cultural lag, for those, again, if you've taken the course, this is a very complicated idea, but it's essentially the idea that culture is divided into 2 main components. It's called material and non-material culture, but the basic idea is that technology tends to advance much more rapidly than other aspects of our culture. And so as a result of that, that can lead to some serious disruption, which can be very good, but it can also lead to things that are maybe not as good, like from the space of fintech, people being left behind in a cashless society, just as a quick example. And then finally, probably the thing that we hear about the most often in terms of news is around privacy and data privacy specifically. And this is obviously something that is key and already is being addressed from a regulatory standpoint and an accountability standpoint, but it's something where we definitely need to spend more time as an industry and as innovators in order to make sure that as we drive the technology forward, we're not simultaneously creating problems around privacy, et cetera. So just a quick, based on the almost 17,000 people that have taken the course from almost 200 countries, what we're going to do is we've received thousands of discussion threads, and we've responded to thousands of comments. And in that process, we took some poll questions. And then as a result of those poll questions, we're going to share some of that today. And then based on that data, we're going to have some conversations, and that's basically what's going to take up our hours. So not meant to be heavily instructive. It's mostly meant to be something where we're just going to converse and obviously answer any questions that you all may have. But just wanted to kind of share what we've seen as a result of this journey. So I'm going to pass it over to David Lee. And David, I will go ahead and run the slides, as you know. So just tell me if you want to stop sharing, and I can kind of break off or start sharing. Just let me know.
Super. Well, thanks, David, for that overview. And again, we're just grateful for all of you, wherever you're zooming in from around the world, for sharing some of your morning or afternoon. And I guess if you're in the US, maybe your evening with us, which we appreciate. As my colleague David Bishop mentioned, we just want to give you an overview of some of the flavor of interesting things that we've picked up through the responses that I'm sure some of you have contributed as you've taken the course. And so the first idea that we want to explore, and of course, if any of you have comments or questions, please let us know. You can come off, we're a small group, so you can come off mute if you like, or you can just type in the chat and we can, follow up that way. But this idea of trust, which David Bishop mentioned, and we had this question in our course: who do you trust more to handle your financial needs and act in your best interest? And there are a series of options, but by far, banks and traditional financial institutions led the way relative to kind of technology, startups, fintech companies, etc. And it's interesting because financial institutions certainly have, for the last few centuries, of various forms and shapes, have been a big part of society and for us individually. But that said, we've seen a lot of debacles and issues that have arisen as well, even in the last few years. And so it's very interesting to see how we continue to give trust to these financial institutions as well. And so that the nature of that relationship seems really interesting to us and has been a topic of discussion. I guess for us moving forward, we think about, would it be possible, or in what scenario do we foresee, or do any of us foresee, that trust could be replaced or supplanted by another player, be it a fintech player or other type of company? And so that's something that'll be interesting to think about, because this idea of trust and how that will change over time, I think is really important. Even though it's not relating to financial technology, if we think just about evolution of certain technologies and like of vehicles and driverless cars, for some reason, if we think about all of humanity that drives, at least we somehow trust ourselves more to drive, though the greatest cause of most accidents, at least in most places in the world, is human error. Yet we still trust ourselves more rather than trusting an algorithm, of a driverless car that, at least statistically, is probably going to be safer. And when those driverless cars have an accident, we tend to, like that one example of that accident, tends to balloon much greater than if I had the same accident, me making the same mistake. And so this idea of trust and how it bleeds in and pervades different societal lenses that we have, I think is one area that we'll explore. And this is a variation of that. Again, people saying, I trust banks more than tech fins. And this is kind of the overwhelming response to that, both in Hong Kong and outside of Hong Kong. And that's interesting for most of you, or a lot of you that maybe have spent time in Hong Kong or in Hong Kong with us now. Obviously, financial institutions play a big role in the economy here. And, oftentimes anywhere you are in Hong Kong, you're probably a stone's throw away from some sort of banking apparatus, institution, building, or employee, for that matter. I mean, they're living in the buildings with you, an ATM machine is down the corner, etc. So again, we see a consistency between these responses. Dave, maybe I'll turn around and ask you this question for a second, and then perhaps we can open it up about where we have felt like we've seen trust in these different financial institutions or transactions that we have. Or is that failing, I guess, from your perspective, or from what you've taken away from the course so far?
Yeah, I'd say a big difference between 2018, when we first started looking at this for the course, for me, and this is a practical example because it's something that I have to deal with or utilize every month, is definitely in terms of global remittances and payments. So I have staff within my companies that are in 5 or 6 different countries. And so there are so many more options to pay people. And the friction, as you would say, has been reduced really significantly. So there have been so many apps that have become available. And as a result of that competition, the cost of utilization of those apps, I think the technology has improved. So from a transparency perspective, I think for me, that has been one of the things that's improved the most, even here in Hong Kong. So Hong Kong, as David mentioned, obviously has a very, very strong financial service sector. However, it's also been traditionally perceived as, from a technology standpoint, maybe lagging behind a lot of other places. And so, we now have pay me apps and other things that are connected to very large financial institutions that have made it so much easier. Like if I'm playing basketball with my friends, or if we go out to eat, it's just so much easier for me to transfer a small sum of money, either for free or very cheaply, to somebody else. I think that peer-to-peer type of thing, whether it's lending, whether it's payments, whether it's remittances, or even just quick transfers, to me, that's something that people have grown to trust very rapidly. And I think an extension of that would also be, if you combine with COVID, definitely around online shopping. And so most people are extremely comfortable now, maybe a little too comfortable now, in terms of my wife and my family. But in terms of like shopping and buying things online, it's very easy to go in to shop and have those things delivered. Again, there's supply chain issues that are also tied to COVID. But I think that those are some areas where just the facilitation of payment from one player to another is something that I think people were fairly skeptical about, in terms of a majority of people, even just 5 or 6 years ago. And now it's extremely comfortable, even for people that maybe wouldn't have utilized technology in the past. That's one thing I've observed.
Well, my response, I guess, David, to that would be, why haven't you paid me back for lunch a few weeks ago if it's so easy to transfer? No, I'm just kidding.
No, don't trust him. David perpetually owes me. No, I'm just kidding.
But I think everything you said, I agree with. And I would say that has also created more opportunities for cybercrime as well.
Yeah.
And so the vectors for attack are much more open. People, as a result of our comfort, I guess, with transacting in these ways, we've also become more susceptible to being, basically subject to fraud in these ways as well. And I think that's one of the big things that we see. And it's interesting. I was looking at some data earlier in terms of like some data that the FBI put together in 2021 about cybercrimes. And basically, the types of populations that are getting impacted by cybercrimes and the amount of money that they're being, scammed out of, and how that plays into how familiar or unfamiliar you are with technology, or how comfortable you are with that. And so that's obviously been a big theme here in Hong Kong, as well as in a lot of other places in Asia, as well as the US. And so I think that's the other side of that coin, so to speak.
Yeah, definitely.
No. And of course, if anybody in I guess in our discussion room here, if people have thoughts or questions, please feel free to chime in, because one of the reasons we're doing this is really to engage with some of you who are interested in this topic, some of you who are perhaps people who are students who have taken the course, which we appreciate. So.
Yeah, so to be specific, does anybody you can either put it in the chat, or if you want to unmute, do you have any examples of kind of FinTech solutions that have basically been enhanced in the past few years from a trust standpoint? And is anybody surprised that there is such a disproportionate trust for traditional banks and financial service institutions over a lot of the FinTech and TechFin organizations that have grown in popularity? Well, ask Andrea. Andrea, as the course facilitator, so the person
and a participant in our course, I believe.
Yeah. So for those that don't know, if you enjoyed the course, it's mostly because Andrea made that possible, and she was instrumental into making it the great I guess visual course that it was. What are some things that you've seen, Andrea? So you're from mainland China. What are some things that you've seen?
Thank you for David for kind of introducing me. I was kind of involved in the development of the course, so definitely had more chance to think through this. But I would like to share one observation is from the user perspective. So I've recently mentored some students, some high school students through this course and talking through these issues with them. And I was shocked at how much they trust the apps and the all kinds of technology services they use without even considering these questions to begin with. Like to take a step back, they wouldn't even understand the concept of why would you trust an app. In their mind, they grew up with technology, they grew up with cell phone. It's basically simple as find an app, download it, install it, follow all the steps, click yes, and then start using it. So I think to me, that's probably the concerning point, whereas they're not questioning why I'm giving you this information. They're not questioning who is really behind this app. Should I trust them? But instead, all that kind of steps have already been skipped when they start using and getting to some extent addicted to these technologies. So maybe not necessarily limited to tech, to fintech or tech fins, but really very broadly, just in terms of the general perspective towards technology among the next generation.
Yeah.
And we have
yeah.
sorry, go ahead.
No, I was gonna say we've got a great comment from, I believe, Geeta in the chat. So Dave, you were gonna, I think, comment on that.
Yeah, I was just gonna read it out. So Geeta said that the younger generation are more versatile and they take these softwares and apps quite quickly versus people that maybe came of age in the 80s and 90s, which I think is definitely true. And I think that's one thing that Andrea is pointing out, which is a positive thing, but also can be a negative thing. And I can say it from the other perspective, not only as a teacher, but as a parent, Andrea. So I have two teenagers and one almost teenager, and definitely they need to be walked through the idea of trust from a corporate or from a technology standpoint. Because like you said, it would be like me saying, do I trust my lawnmower? Of course I trusted my lawnmower. To me, there was no connection to that in terms of like what might result from a privacy standpoint, but it's obviously much deeper and much more complicated than that in terms of the technology today.
Just to add on to the positive side, I think what I also see, not just within the next generation, but also, like you mentioned, David, I'm from mainland China, so I use a lot of mainland-based apps. During COVID, we're seeing an increasing amount of trust on these social-based platforms where people are using these fintech tools and technology tools to support each other, to send information, to share COVID aid resources and information. So that, I think, is definitely a tremendous positive usage of these technology, if to send information quickly, to verify information quickly. And so I think that's something that definitely we have seen super positive examples in.
Yeah, as someone who sees that tangentially on the sidelines, I mean, I have like Weixin and stuff, but obviously I'm not a heavy user of it. It's fascinating to view that from an observer perspective, because it does seem that like mainland China seems to have a dedication and even reliance on apps in terms of an ecosystem in a way that seems unique by comparison to other places in the world. Maybe David Lee can speak to other places like maybe Korea or something where they do heavily utilize a small number of apps. But I'll be curious to see over the next few years, like if movers in other parts of the world shift to other apps as their trust kind of transitions and they go to that next thing. Yeah.
Hi.
Jasmine, my favorite student. There you go. Thank you.
Well,
I love your filter, by the way, Jasmine. That's great.
Thank you. Well, I was just going to say, this is just an observation, like we're on the topic of trust, right? Let's say about 2 years ago in Hong Kong, e-wallets are not exactly a very common thing. Like it's kind of like an alternative kind of payment. I mean, it's already around, but it's not. I don't think everyone used to use it at that time. But like last year, due to the COVID situation, then the government paid in money to Hong Kong permanent residents, and they started using those apps. And it's like you can choose to receive money in any which way. There are certain channels. So I think that kind of facilitated the usage as well. So I don't think many common folks would really think seriously about, oh, do I trust it or not? But it's like, if there's a pusher for that kind of channels, and especially if the pusher is the government, then they're like, oh, okay, well, the government is giving me money, so okay, I'm just going to start using it. But after starting to use it, then it might become a habit, and they would just continue to use it. And especially the older generation, probably without that initiative, they might not adopt e-wallet so soon, or might never, or ever. So once they have started using it, I mean, initially there'll be complaints lists like, why would I need to use this, blah, blah, blah. But after a while, then they're, oh, okay, so it works. And nowadays, in fact, this couple of months, in a lot of merchants, it's become like cash or octopus or what. So those e-wallets have in fact become like a mainstream option in some merchants as well.
Yeah, and so Jasmine, on that point, so I think that's spot on. This idea of how, particularly in markets where the government has a big role in business, and how those certain policies can shape behavior. So I completely agree with that. What I always find ironic is, I can't remember when Octopus first came out, but let's say 20 years or so ago, Hong Kong was so much at the forefront of this electronic stored value.
Right.
Like when Octopus payment. So for some people who aren't in Hong Kong, I don't know if David, you have your Octopus card or somebody can show it, but we got issued these cards, or you could get, there it is. And it's called an Octopus card, and it serves, you could use it for transportation. You could walk into McDonald's, you could go to the hospital and pay, like a public hospital. You could pay, like, I know people who have had their children and paid for like their delivery of their children using Octopus cards. And Hong Kong was so much at the forefront of digital payment technology and the early versions of what we now call wallets, and yet it fell so far behind until recently, and it's catching up through all the tools that you mentioned there, Jasmine. So I think that's a really great point.
And I think Jasmine's point really ties in well with another of Geetha's comments. So Geetha said, used to work in a bank, and one segment of the population that's very distrusting of the internet and all that comes with it would be the elderly people. And it was sad in the case that was mentioned, the central bank was pushing to go digital during COVID. However, they just stop and reevaluate as to not leave out some segments of the population. So Jasmine provides a great example of where the government was trying to do a good thing and to provide cash to everyone in Hong Kong in order to, I guess, shore up some of the economic system. And this was done in many places around the world, which is, of course, a great initiative. And it did lead to a lot of people transitioning towards digital technologies and adopting digital technologies, et cetera. But as Geetha is pointing out, it also means that a lot of people may not have had access to that funding, even though they would have qualified for it. And so we are seeing that in other parts of the world where government, they do have handouts or other types of social safety payments that they want to transition to paying those digitally. And as a result of that, it requires NGOs and other people, I guess, becoming intermediaries to help them learn how to either have the technology or the hardware, whatever that's necessary in order to connect those dots. And so I think thank you, Geetha, and thank you, Jasmine. I think you've kind of touched on both sides of that really well.
Yeah, and I think one thing that frequently goes unnoticed, just to echo those points that David mentioned, as well as Geetha and Jasmine, is we think about the older, whatever we want to call it. I mean, I guess we're older generation too now, Dave, I don't know. But
yeah, we're older, we can admit it.
As we think about how that evolves, so there's obviously this underlying trust issue. There's obviously some issues around facility with technology. And then, but there's a real interesting issue with respect to just am I familiar with using a phone, like a smartphone, right? And I think that distance between being familiar with that and not, I think that's hard to bridge if you're at a particular time in your life where you're not willing to do that. But so much of what is expected in Hong Kong right now, for example, with quarantine, vaccination confirmations or or receiving payments, almost all of that implicitly requires a smartphone. And so there's the cost component to it, as well as the comfortability of use to that. So that's also a barrier that we oftentimes overlook.
Yeah, I think so. So Matthew Lay has said that he works in a bank. He talked about the HKMA, that's the Hong Kong Monetary Authority, for those that are not familiar with that. So I'm assuming it's a bank here in Hong Kong. And it's actually a good point of transition into our next point. So I'm going to go ahead and share my screen again. And again, this particular one is an extension of what was discussed previously. But again, it's an extension, meaning it goes into our next point. This is around the idea of automation and advancements of technology. And so this question asks, what industry do you think is most likely to see major automation and employment disruption over the next 15 years? It's crazy to think that we're already 4 years into that timeline. I guess it is true what my parents used to say, that time just moves faster and faster the older that you get, because it seemed like projecting 15 years into the future was so far, and yet we're already, considered almost a third into that timeline. Obviously, there's maybe a little bit of confirmation bias because this is a FinTech course, and so it attracted a lot of people in finance. But as you can see, I think there's a predominant belief that the financial services sector is either in need of or will be, hopefully will be actually transitioning. And so that gets to what Matthew was saying. In terms of your perspectives, though, at least from the users or the participants in the course, again, we had thousands of respondents. And one of the things we were curious to find out is like, how optimistic are you about the future? So David Lee and I, we were a little bit concerned when we created the course that it would come off as a little bit pessimistic or negative. And so, we repeatedly said throughout that even though we're talking about some potential negative externalities or ramifications of these things, we were very optimistic about the potential for improvement, continual improvement and change. And so, as you can see, A, B, C, D, we asked, how concerned people would be, A being the most concerned, D being the least concerned. And as you can see, around the world, our users are actually quite excited, even though, a little bit of hesitance or reticence. Definitely a lot of us don't completely understand that technology yet, but we are generally very optimistic about the idea that through innovation and technologies, and hopefully the addition of sound regulation and governance and stuff, we'll be able to create new systems that employ a lot of people. So our next conversation is one around, again, automation, adaptation, and how industries and sectors have changed. And I will go ahead and start really quickly because if you did take the course, we threw out a statistic that it's predicted, well, it was predicted in 2018 that 38% of jobs in developed economies like the US or like Hong Kong were at risk of significant disruption within a 15-year span of time. That's why we chose that 15-year period. And in the US, that would represent 60 million jobs. So obviously this is a huge, if it is true, this is a huge potential impact on the global economy and in terms of jobs, et cetera. If you pay attention today, so for example, some new research has come out that shows that youth unemployment in a lot of sectors, including in China, which typically has very solid youth employment, there is a statistic that came out, I think today, that said youth unemployment in China is now at 23%. And so from a global perspective, a lot has changed since 2018 till right now, from a standpoint of employment, from a standpoint of jobs. And so one thing that I'll point out just in our sector, which has nothing to do with FinTech, but there has been a huge influx of I guess you could call it automation in the education sector. I mean, we call it a flipped classroom, but the fact that we are teaching online, the fact that we're recording lectures and making them available to people, this is something that would have been inconceivable just a few years ago, I think, for a lot of people. And one thing that I think David and I can agree on, it's not exactly been a welcomed change for the most part, but it's something that has, I think, fast forwarded or just really leapfrogged a lot of friction that would have occurred in this space and forced people to change more quickly than they otherwise would have. So back to you, David Lee. What are some things other than the education sector? I mean, unless if there's other things you want to talk about, what are some things that you've seen in terms of like, has this sped things up? Has it slowed things down? What do you think from the automation and disruption standpoint?
So in the current class that Jasmine is in, that I'm teaching here at HKU, we had actually one of my former MBA students who is a senior person at an AI asset manager, basically, and basically what they do is they provide AI solutions to financial institutions and asset managers. So they are a B2B business as opposed to directly, individual consumer or investors business. But so he actually just spoke on Monday in our class virtually, as you mentioned, and it was interesting to hear the questions that the students had. And then in a previous speaker who came in and talked about big data and so kind of the fuel for a lot of these machine learning, alternative artificial intelligence models. Between those two speakers, a lot of the questions that these two speakers got from the students, effectively, if we boiled it down, was like, so how is this going to impact me in getting a job? Like, am I going to be out of work? Like, will I be able to be a finance person or accountant or
Sure.
whatever? And the reality was, I think, and Jasmine can correct me if I'm wrong, but the way I absorbed and processed the responses, and the speakers were really nice because they answered they got the same question asked in different ways many times. And but basically their response was pretty consistent in the sense that, it's uncertain, but at the same time, right now, we know that humans are necessary for some of these decisions. And I think in the research that I've looked at, when you look at, like, if you just classify it into 3 buckets, like humans only, robots, or AI or whatever technology only, and then a hybrid, so far, most data seems to indicate that the hybrid form is probably the most effective and efficient. So technology, yeah, so certainly some humans will be supplanted, but it likely would not be all technology only, and it will be this combination. And so on that value chain, if you are someone who's looking to, hey, well, how do I structure my career, and you're in a particular industry that has a high chance of being disrupted by this entrance of technology, then the idea would be like, oh, how can I partner with this technology? Even if I'm not a technologist, how can I partner with this technology to kind of further build my career? And I think that's probably the approach that most people need to take as we think about this automation, adaptation, and effectively, business as it was is probably not going to be how it is moving forward. I do have an example that was kind of came up in class, but sometimes we think about, how does this actually look in the office? I think we all can envision how this looks like in a factory, right? That's not hard. We can Google that, YouTube search, and find robots in factory videos. I think that's easy. But how does that look in office? And here's one example. There was a firm that created not a very fancy model at all, but like they created an AI solution for a number of financial institution clients that were dealing with compliance issues. And the gist of that was, as many of you know, particularly those of you that work in financial services like Matthew or Geeta, banks are subject to higher and higher levels of compliance and regulatory scrutiny. And if you're a global bank, you're facing regulatory scrutiny, not just from, like, if you're in Hong Kong, not just the Hong Kong MA or the SFC, but also if you're a global bank, from regulators in all the jurisdictions that you're in. And if you're sitting, let's say, in Hong Kong, but a new US regulation comes out, sometimes you may not know that new information. You may not, there's a process by which information has to flow. But up till now, most banks have just thrown lots of people at it. They're like, oh, let's just hire more compliance people to get this information. They'll read it and then distribute it and help us apply it. And this particular firm that I have in mind, what they did was they created a solution that would basically collect all of these different regulatory updates that different regulators are putting out. And through using NLP and some other tools, they were basically trying to make that process much more efficient. So that way you didn't have, people who are highly skilled, trained, and educated just literally spending hours a day just reading updates to see, oh, we should send this to the Tokyo office, we should send this to whoever, or this trading desk, or this credit risk people, or whatever. And they were able to automate that process, which then creates a lot more value added work for the people who are there, as opposed to just reading and writing reports and distributing it. So I think that's the way, hopefully that's the way we frame it as we move forward.
Yeah, so in terms of, thank you for that. And thank you, Matthew, for the comment. Again, if anybody else has any others, please feel free to jump in. But I think that gives us another segue into the next line of questions that we asked the learners that we're now going to share with you. And this goes into, like, from a very practical perspective, how we interact with financial services, and specifically around cash and currency. So David Lee, back to you.
So I think about, did you still use cash? And so when I answer this for myself, I would probably say rarely. So much so that if I go out to eat lunch with David Bishop, I say, hey, Dave, I don't have any cash, but I'll send you some money later, and then I'll never send it. But just kidding. I always pay my lunch bills.
He does. He pays his debts.
But this is interesting, and I think it's expected in the sense that in some respects, and let me put it this way. I think though, if would have done this a few years ago, the proportion of people using cash would have been higher, right? Now that said, it's interesting to me. The thing that is interesting to me, and maybe some people find this, of course, it should be this way, but I would have assumed that the use of cash would have been lower for maybe that 20 to 39-year-old generation. And maybe part of the reason is the way we structured the question. Like maybe we should have had how frequently do you use cash? Maybe that's would have been a better question. But I think about my own spending patterns, and I rarely use cash, and so that becomes something that is interesting. But
and so that ties into the next slide. So maybe let me. In terms of, I guess this might give us a more accurate sense, this and the next slide, in terms of the way, from a generational standpoint, people are looking at the transition to a cashless society.
Yeah, and so for me, the interesting question here is the second one about, should a store be forced to accept cash payments? That's the really interesting question to me. But let's start with the first one. You want to move to a complete cashless society, and in the younger generation, again, interestingly, they say no. Which is, again, I would have assumed that proportion would have maybe been lower, and in the older generation, a little bit more expected, I guess. To Deepak's question in the chat, the survey, the bulk of the responses came in pre-COVID, right? So you're right. There could be a scenario where if we do the same question today, that the responses look very differently. Certainly.
And now, so we are still receiving.
We are still receiving responses.
And so in terms of when we pulled the data, it was very recent. But to David's point, probably 10,000 or so of the 13 to 15,000 responses are primarily at the either pre-COVID or the beginning of COVID.
Yeah. Now, if I exercise some teacher's prerogative and just move to the question that I'm really interested in, which is, should a store be forced to accept cash payments? Now, the legal answer to that in a lot of places in the world is yes. That said, both David Bishop and I had an experience where we were at a store in China that didn't accept cash payments. And so it's not yes everywhere in the world. But that kind of bleeds into a broader question about, why do governments require, at least certain governments, why do certain governments require that stores receive cash, right? Why don't they just say, hey, you can be digital only? Now, and we'll take the digital currencies that some governments are going down. We'll put that aside for now, because those aren't widespread yet. So considering the forms of payment that we have now, which are cash and the various forms of credit card or pure digital payment, why couldn't a store go to fully either credit card or digital payments, like Apple Pay or PayMe or Octopus or WeChat Pay or whatever it is? And there are a lot of jurisdictions in the world that don't allow that, because they say, hey, if we think of this in its most basic form, an expression of authority and control over the economy is the ability of a government to control its currency and how it's used and how it's deployed. And I think if you start creating use cases where that currency itself is not readily accepted as a medium of transaction, then you're potentially opening up, or there are concerns that opens up a can of worms for certain countries. And we've seen that so there are some countries that have gone full crypto, and that has not gone smoothly for most of those countries. Let's put it that way.
Yeah,
at least.
Just Google Honduras or yeah, there's a couple examples. But even in terms of developed economies, to David's point, so Sweden, I think most famously, said that they were moving towards a cashless society, and they really pushed that forward. And then again, just as famously, kind of backed off on that once they realized there were some inequalities that were being developed as a result of that. I'm sure they'll eventually get there if that is a motivation that they think is worthwhile. And obviously, China, as our neighbor next door, they probably, in terms of scale, have done the most globally in terms of moving things in that direction. And there's a lot of policy reasons why a government may want to do that, in terms of better control over taxes or understanding how much money people are making, also in terms of the cost of actually creating physical currency. So there's a lot of reasons why governments may want to, from a policy perspective, move towards a cashless or digital payment type of economy. But at the same time, going back to comments from Geeta and other people, we have to balance that with the social needs of people, throughout the ecosystem. Yeah. So anybody? Oh, sorry, David. Go ahead.
Oh, no, I was just going to agree, and I would just say that I don't think there's any scenario, and because we've had some kind of very bad attempts at this recently, I don't think there's any scenario where a government goes fully digital without creating their own digital currency. So if they say, hey, we're going to go complete cashless without their own digital currency, I don't think that's ever going to happen. And I think to your point about the transaction costs related to doing that are quite high in a sense because of this inequality, these frictions. But at the same time, there's obviously really great public policy reasons to do it. Like, it's better for the environment, generally speaking. You're not having to replace paper bills all the time and coins. It's more efficient. You're able to get cash. So if you're doing stimulus, you're able to get money to where you want it in a much more direct way. You're able to cut down on corruption. You're able to have greater clarity and transparency on people who are avoiding taxes and things like that. So certainly it's a trend, but I don't think it'll come at the full expense of sovereign currency. It'll just be how that sovereign currency looks moving forward.
Yeah, and there has been, even when countries have tried to do that in terms of, say, Marshall Islands, a lot of smaller nations, there has been extreme pushback by international institutions like the IMF, et cetera. So it'll be interesting to see, how that transitions. Okay, great. So if anybody has any comments or questions, again, we've got about 15 minutes left, 14 minutes left. And so we're just going to roll into the next quick section in terms of the survey results, but please do feel free to jump in either by unmuting and throwing out a question or comment, or by throwing it in the chat. So one of the things that we found interesting, so around the latter half of the course in modules 5 and 6, we focused a lot on the future. And so one of the things that we wanted to look at is just in terms of going back to what Andrew was talking about earlier, especially in terms of people's use of mobile applications and whether or not they're actually understanding the terms in when they utilize, say, Instagram or Weixin or another different type of mobile application, like what rights you have and what rights you're giving up. And so we found this very interesting. Again, we're not so sure this is necessarily representative of real life. This particular one, we had a very, I think, a very large number of people that said that they do actually read some, or even a handful of people that say every time. I can speak for myself. I'm not going to refute the data, but I definitely do not. And so these numbers surprised us a little bit. But basically what it boils down to is that most people either don't read them very often or they don't read them at all. In terms of terms and conditions, et cetera. But then in terms of, I think these are a bit easier to quantify and analyze in terms of like who we trust with our data. And so one interesting thing is that the younger generation, meaning people that are 40 or lower, 39 and younger, they actually have even less trust towards both private companies and the government than my generation, the older generation, does have. Which we found kind of interesting, especially because, as Andrea said, oftentimes questions of data privacy and trust are just, research tends to show that younger people just assume they're not going to have any privacy anyway, and so they often just blindly trust mobile applications, et cetera. So this was interesting in terms of a response. Again, from a Hong Kong versus rest of the world perspective, there is really not that much a difference, but you can see, again, a very, very substantial percentage of people do not trust either. But in Hong Kong, there is greater trust for private companies than there is for the government. I think anyone that has been in or around Hong Kong over the past 4 years probably understands why that is the case. But it's important to understand that is a substantial difference than previously. So Hong Kong, as a jurisdiction, has typically had one of the highest in terms of government approval ratings across the board of any jurisdiction in the world. And that has obviously cratered since around 2018 or 19, maybe even a little bit before then. So that's something that I think is an unfortunate trend in Hong Kong. And then finally, one of the questions that we asked, which I think is one of the larger and more complicated things, but also one of the more interesting things going forward, is we looked at how, if we want trust, if we want accountability in this space, how should we be governing these large tech-fin applications or companies like Facebook, et cetera. And as David Lee and I predicted in the course, which again, I mean, it was not very difficult to predict, there was substantial conversation throughout the world over the last 4 years about the way that large technology firms should be regulated. And specifically, the question that we asked is to you as the course participants, should large fintech and tech fin companies be regulated like utilities, or should they continue to operate as they are? And it was almost exactly the same across generations. Basically, everyone's like, yeah, they should be regulated like utilities. And I think part of that may be that we don't understand the complexity of what that would require. Part of that is probably just an expression of frustration that we have towards these large dominant companies that we feel like we have a power asymmetry with them. And so we feel like we just want them maybe to be humbled a little bit. But it is interesting to see the shift among, I mean, it's overwhelming support for the idea of really significant regulation, which did surprise us. And so again, if we go back to Hong Kong versus the rest of the world, in Hong Kong, there was even a higher propensity for people to say they should be regulated like utilities. So these were things that surprised us. And again, just quickly, a few examples. So Google, the idea of search becoming a public good in the US, passing tech antitrust reforms. Europe obviously has been at the forefront of a lot of this. So again, it was kind of cool to see those predictions come to life and to be, I guess, correct. But at the same time, there's still a very long way to go, I think, before we're really going to understand this landscape and understand, you know, at what point does Google become a public good, for example. Anyway, David Lee, any thoughts on that?
I think with respect to the idea of utilities, it's very interesting. I think there's a sentiment there, like to your point, David. I think there's a growing sentiment there, and I look at it from two perspectives. One is a lot of these large technology companies could have avoided much of their problem that they're facing today had they self-regulated a little bit more upfront. And that's really hard, obviously, once you are, like, if you're a venture-backed company, you've taken other people's money and they're expecting certain levels of growth. But as I looked at these problems and in my own thinking, one of the ways I come out on this, if at the end of the day you think, hey, it's better for us to self-regulate ourselves as opposed to having government really clamp down on us, which for most private companies, that will always be the case, then the rational choice in my mind would be, oh, let's stop trying to make as much money as possible now. Let's curtail a little bit of our behavior and put it more in what is maybe a little bit more in more of an acceptable box, so to speak. That way we can hopefully prevent some overt regulation, which is on the horizon. So it's already happening, or happened in China, obviously. And in many respects, it's happening or on the horizon for more in Europe. And in various ways, it's happening in the US, or in very robust discussions at the moment. And so I think this idea of self-regulation is important. I think on the flip side, you know, if we go down to this very, like, I don't want to say extreme, but very aggressive route of like, hey, you guys are all utilities, large technology companies, utilities, that becomes a really interesting jurisdictional issue, I think, because let's say the US does that, there could be certainly jurisdictions where they won't require the same behavior. So then all of a sudden you get a very fragmented internet that people are interacting with, which you already have to a certain extent now, but that will just happen even more. And I don't know if that's a good thing. So.
Yeah, and to that point, it is interesting because obviously these companies, well, if we're talking about tech fins rather than financial service firms specifically, which typically have to have local registration, they do transcend geographies. And so it's interesting if you have the debate is largely one that's been going on since like pre-Marxist technological determinism. The idea, is it the technology itself that's doing bad things, or is it the way that it's being used, and therefore the user who should be patrolled or you know have enforcement mechanisms against them? And so now you have these large global platforms, like let's just take YouTube, which I know is not a fintech platform, but it's an example everyone understands, where there's often a question of if someone utilizes YouTube as a platform for the posting of something that is illegal or maybe a copyright infringement, is that the fault of the person who posted it, or is that the fault of Google and YouTube directly? And just yesterday, there was a case in Australia where the Australian courts there determined that YouTube was responsible for videos that were posted that were defamatory about an individual, and they awarded this gentleman, I think, 500,000 Australian dollars, something like that. A pretty substantial sum, which, I mean, again, to a company like YouTube is not that big of a deal, but it does mean that they would have to consider what that means for their platform globally, because it's not just like it would, they would be able to curtail or have this one specific usage in Australia very easily. And so to me, that's the interesting part is like of this debate, is that you have these technologies and these platforms that largely do traverse the entire world. And the question is like, how do you regulate them in different jurisdictions?
And so what's happened? So I'm not familiar with the facts of the Australian case, but that sounds like a variation of a libel, right, or a slander type of situation, right? And if we did that, if we used a typical newspaper scenario where a newspaper published falsehoods that damaged your reputation, that had some kind of economic impact on Andrea, hypothetically, and Andrea sued the newspaper, legally there's a lot of precedent for that. But for this particular situation you're talking about Australia, there's not. And so what I would say is, I'm sure YouTube is going to appeal that.
Oh yeah,
I'm
for
sure. It would be very interesting to see if the guy who brought the suit wins on appeal, because my inclination, he probably won't, or at least the award will be knocked down significantly. But in the United States, we have this Communications Decency Act, and what we did 20 years ago, or almost 30 years ago now, we said platform providers will not be responsible for content that will be posted. So we took a very different approach in the United States than we did, which the traditional approach was, oh, if you're a newspaper, you're a platform, you're writing false things, oh, we're going to make you responsible. But we said for these internet technology platforms, oh, you will not be responsible. And the argument was, hey, we want to foster innovation. The question is, have we reached a point where we're like, this innovation thing, not that important when it comes to influencers uploading YouTube videos? And so
that's only because you're not a good TikTok dancer, David. You would have a different attitude if you were a TikTok influencer.
I'm sure I would if my TikToks got impacted, or like you always watch these TV shows where they're like, is it a TikTok or a talk tick? I don't know, right? And so, but I guess the point is like that those will be very interesting inflection points, because as you see that happening, then that in its own way is a form of kind of regulatory change, even though it didn't come through direct regulation, it just came through litigation.
Yeah. Well, look, we got about 2 minutes left. So again, before we sign off, we want to say thank you so much. Again, it's great. I'm glad David asked the question. It's so good to have such a diverse group. For those that haven't taken the course, please do consider signing up. Maybe Andrea, you could drop the link in the chat just in case. For those of you that did, thank you for supporting it. It was a very interesting journey for us. We appreciate everyone's help and participation along the way. We're open to, we can stick around for a few minutes if anybody has any additional questions. But because this is that automated kind of like education environment, Andrea is going to push us to do one thing that David and Lee and I both hate, but we know it's worthwhile. For those that are willing, we'd like to take a quick snapshot, screenshot of the participants. And so if you're willing and if you're in a place where it is allowable, if you could go ahead and turn on your video, we'll take a quick image, which we'll throw up on LinkedIn. But please do feel free to reach out. I've already had one person from the group today I noticed has asked to join on, connect with me on LinkedIn. Please feel free to do so. This is not the only space that David, Lee, and I are active in, but we're happy to continue this conversation again today or in the future if you have any interest.